studying your last two. I swim med tea when they turned in. The staring out to mute. And can learn the pole that sunk he died.
In the previous section, we learned that many owner-managers are not required to participate in employment insurance because of their ownership and control of the corporation. But what happens if a family member who works in the business actually wants EI coverage so they can qualify for benefits in the future? The answer is that it may be possible, but only if the employment relationship is genuine. Many family businesses employ spouses, adult children, parents, or other relatives. It is very common for these family members to receive regular salaries and perform important roles in the business. However, because they are related to the owner, the employment insurance rules require additional review before deciding whether the employment is insurable. The general rule is that employment between related individuals is not automatically treated the same way as employment between unrelated parties. The Canada Revenue Agency recognizes that family members may influence employment decisions differently than independent employers and employees. As a result, simply paying a salary does not automatically mean EI premiums should be deducted or that EI benefits will be available. Fortunately, there is an important exception. If the family member is employed under a genuine employment relationship, their employment may still qualify as insurable. The key issue is not whether the individuals are related. The key issue is whether the employment arrangement resembles a normal commercial employment relationship. The review begins by confirming that the family member is actually performing work for the business. They should have clearly defined job responsibilities and contribute to the daily operations of the company. Paying someone simply because they are a family member is very different from paying someone because they are performing valuable services. Next, the salary should be reasonable. The amount paid should be similar to what the corporation would pay an unrelated employee performing the same duties. Excessively high or unusually low salaries may suggest that the arrangement is not based on normal business practices. The working conditions should also resemble those of any other employee. The family member should have regular work hours, assigned responsibilities, and be subject to normal supervision and workplace expectations whenever appropriate. Proper payroll records are equally important. The corporation should maintain payroll records, issue pay slips, make payroll deductions where required, and retain employment documentation just as it would for any unrelated employee. Good documentation demonstrates that the employment relationship is genuine and professionally managed. Ultimately, the CRA evaluates all of these facts before determining whether the employment is insurable for employment insurance purposes. Their decision is based on the overall employment relationship rather than the family connection alone. The key message from this slide is that being related to the business owner does not automatically prevent employment insurance coverage. If the family member performs real work, receives reasonable compensation, works under normal employment conditions, and proper payroll records are maintained, the employment may qualify for EI. The relationship must be genuine, well documented, and capable of standing up to CRA review. Now that we've seen that family members can sometimes qualify for employment insurance, the next question is how the Canada Revenue Agency actually decides whether that employment is insurable. Rather than looking only at family relationships, the CRA examines the overall employment arrangement to determine whether it is genuine and comparable to a normal employer-employee relationship. The first question the CRA asks is whether the family member is performing actual work for the business. This means the individual should have real duties, regular responsibilities, and actively contribute to the operations of the company. If someone receives a salary without providing meaningful services, the employment relationship may not be considered genuine. Next, The CRA considers whether the salary is reasonable. A useful question to ask is this: would the corporation pay the same amount to an unrelated person performing exactly the same work? If the answer is yes, the salary is more likely to be viewed as reasonable. If the compensation is unusually high or unusually low without a business explanation, additional questions may arise. Working conditions are also reviewed. Family employees should generally work under conditions similar to other employees. This includes regular work schedules, assigned responsibilities, expected performance standards, and appropriate supervision where applicable. A genuine employee should be treated like any other member of the workforce. Another important test is whether the corporation would hire an unrelated person to perform the same role if the family member were unavailable. This is one of the strongest indicators of a genuine commercial employment relationship. If the answer is yes, it supports the argument that the position exists because the business genuinely needs the work performed, not simply because of the family relationship. Documentation is equally important. Employment agreements, payroll records, time sheets, job descriptions, and other supporting documents demonstrate that the employment arrangement is being managed professionally. Well-maintained records provide valuable evidence if the CRA reviews the file. The CRA also evaluates whether the relationship is commercial in nature. In other words, they ask whether the employment arrangement operates like a normal business relationship or whether it exists primarily because the individuals are family members. The more closely the arrangement resembles ordinary commercial employment, the stronger the case for EI coverage. After considering all of these factors, the CRA generally reaches one of three conclusions. If the evidence strongly supports a genuine employment relationship, EI coverage is more likely to be accepted. If some questions remain, additional information or clarification may be requested before a decision is made. However, if the arrangement appears artificial or lacks sufficient evidence, EI coverage may be denied. A helpful way to remember the CRA's approach is to focus on one central question. Would this employment arrangement exist if the individuals were completely unrelated? If the answer is yes, and the facts support that conclusion, the employment is much more likely to be considered insurable. The key takeaway from this slide is that the CRA evaluates substance over relationship. Being a family member does not automatically disqualify someone from employment insurance, nor does it automatically qualify them. What matters is whether the employment is genuine, commercially reasonable, properly documented, and comparable to the employment of an unrelated worker. This slide brings everything together by showing how a family business can plan employment insurance coverage correctly and legitimately, rather than focusing only on whether EI applies. This framework helps business owners establish an employment relationship that satisfies CRA expectations and provides the strongest support for EI eligibility. The process begins with one simple question: is the family member genuinely working in the business? If the answer is yes, we move to the next step. If the individual is not performing real work, the arrangement immediately carries a much higher risk that the CRA may determine the employment is not insurable. Next, consider whether the family member works on a regular basis. A genuine employee should have consistent responsibilities and perform ongoing duties that contribute to the business. Occasional or irregular involvement may weaken the case for EI coverage. The next step is determining whether the individual receives a regular salary. A legitimate employee should generally be paid through the normal payroll system. Just like any other employee, salary payments should follow a consistent schedule rather than being made only when it is convenient or for tax planning purposes. The CRA also considers whether the employee performs normal business duties. Their responsibilities should reflect an actual business need. and the work performed should be similar to what would be expected if the position were filled by someone outside the family. Compensation must also be reasonable. The amount paid should reflect the value of the work being performed and should be comparable to market rates for similar positions. Paying an artificially high or unusually low salary simply because the employee is a family member can create unnecessary scrutiny. Another critical requirement is maintaining proper payroll records. Payroll should be processed correctly. Deductions should be made where required. Employment agreements should be retained, and supporting records such as timesheets and job descriptions should be maintained. These documents demonstrate that the employment relationship is being managed professionally. When all of these conditions are met, the employment is much more likely to be considered genuine and insurable. This not only supports the payment of employment insurance premiums, but also increases the likelihood that the employee will qualify for EI benefits if they meet all other eligibility requirements in the future. The role of the accountant is equally important. A CPA can help the family business establish proper payroll procedures, prepare written employment agreements, review compensation levels, maintain accurate records, and ensure the employment arrangement complies with CRA expectations. Good planning at the beginning often prevents problems during a future CRA review. It's equally important to understand what should be avoided. Paying family members who perform little or no work, creating artificial salary arrangements, failing to maintain payroll documentation, or employing relatives without a genuine business need can significantly increase the risk that EI coverage will be denied. These arrangements are difficult to defend because they do not resemble ordinary commercial employment. The strongest employment insurance cases are built on good business practices. Start with a written employment agreement. Establish proper payroll procedures. Pay a regular market-based salary. Maintain complete documentation, and treat family employees in the same professional manner as unrelated employees. By following these steps, the corporation creates a solid foundation for EI eligibility and demonstrates that the employment relationship exists because of legitimate business needs rather than family connections alone. The key takeaway from this section is simple. Proper documentation and genuine employment are the foundation of successful EI planning. When a family employee is hired, managed, and compensated like any other employee, the corporation is in the strongest possible position to support employment insurance coverage if the CRA ever reviews the arrangement.